Hello, Maverick traders. Welcome back to your market roundup for September 27th. Corey here with you. Let's get into it. Quick reminder to make sure you follow your trading plan. So, markets today, I would say a little bit of a pause and maybe the pause before a little bit of a bounce back. Let's take a look together. So, if we take a look at the daily returns, everything pretty much flat with the exception of oil. Oil had a pretty nice day, up about 2%, but everything else right around flat, a little bit positive for the NASDAQ and the Russell, a little bit negative for the Dow and the S&P. Gold basically flat, and the US dollar was flat, and the US dollar's just been on this gigantic tear to the upside, which has been hurting commodities, weighing down financial assets, certainly hurting international stocks and so forth. So that dollar, if it were to roll over, that should help the equity market to bounce. Advanced decline line, again, roughly 50-50, and we're in this bear market. Look, most stocks are trending lower in the short term as well, 88% of stocks below their 50-period moving average. On the daily news, home prices slowed at the fastest rate according to the Case-Shiller Index. So since they've been tracking that, home prices came down in dramatic fashion. Hurricane Ian moving towards Florida. Disney World, some of the other big attractions there in Florida shutting down. I think it was the Tampa Bay Buccaneers are leaving their facilities and so forth. So it's coming head first into the U.S. And of course, we know that Puerto Rico got smashed by a hurricane. I've lived through a couple of hurricanes, so the one that I specifically was in the 90s was pretty devastating. It washed out roads and just devastated a lot of homes and areas and so forth. Let's take a look at the S&P chart. This is the one that I think we've been focusing on for what I see is I think an inverse cup and handle is coming. And so somebody asked me, well, how soon do we bounce? I don't know. It's kind of a guess as to whether or not it'll be immediate. But I thought, we should start to bounce here within the next few days. But it's more about what's going to happen than when. I don't know the precise day. I mean, today could have bounced back, could have wicked down and then recovered a lot. It stayed, it tried to bounce and then kind of faded off. Could we have another down day? Sure, but I think ultimately you're going to see this bounce. It could be wishful thinking. Maybe we just continue to decline here, but I don't think so. I think we're in a pattern where we'll see a bounce, and it's a pretty good size bounce. It'd be about a 5% rally up into this area and ultimately probably break down from there, but that's kind of the pattern and the expectation that I would have. If you look at the NASDAQ chart, it's the same thing. We've been on this sharp decline. I think sooner rather than later, we're going to start to get that bounce, and it'll be choppy. It won't just go in a straight line, but you'll start to bounce up there and create this inverse cup and handle. So the bounce effect is right here. You bounce up, then you kind of stall out, and then you'd probably go back down and through that level of support is probably the third time to this support, right? Here's one, here's two, you get a good size bounce, and then you'd come back the third time and break and go violently lower. That's the price pattern. Today I even put on later in the day a bullish market trade. I haven't had an S&P product on the bullish side for some time and just entered into that today, positioning for a bounce. But again, I'm not suggesting that that'll happen within the next day or two. It's more where I think the next few weeks are going. The heat map, more green in energy. Again, oil bounce back. I would not be surprised personally, speaking personally, if oil is putting in a low right around here, if nat gas is putting in a low right around here, and that the dollar is putting in a temporary high like we talked about. Consumer defensive stocks really got hammered. So semiconductors bounced back. This was a beaten down segment. Today, at least, the growth stocks outperform the value. You notice consumer defensive, utilities. This is where these are the defensive kind of hideout spots. They pay dividends, et cetera, et cetera. and those were getting slammed today, whereas the growth names were actually doing really well. And so I think that's worth watching a little more closely. Maybe growth is going to bounce back because remember, growth led us to the downside. Growth kind of got slammed in this bear market much more than value. It makes sense that it would actually start to lead on the bounce back, even though it's not going to be a full bull market recovery. It probably bottoms first, and that's kind of what you're seeing is it's sort of a spring loaded thing. There's so many shorts in the growth stocks that there's probably some covering as they go higher. The weekly outlook for me is more on the bullish side, realizing we're still in a bear market, but that in the short term, I'm fully anticipating a bounce for a couple of weeks here. So let's look at some candidates here. On the bullish side, we've got 3 different names, and on the bearish side, we've got a few names to look at. Let's start with the bulls, and the first one that comes to mind is Foot Locker. Just looking for things that are holding up relatively well, and this has kind of come in to fill the gap. It's a key level. This was the breakout zone. You even have kind of that ABC, if you follow Elliott wave theory, kind of go pull back or correct back in price in a 3-wave pattern before the next acceleration. So has a lot of those technical aspects that we look for, still above its 50-period moving average. PDD, this is Pinduoduo. This is a Chinese name. Emerging market stocks, some of those other areas of the market have been really beaten down, but look at how well this one's holding up. You're still above the uptrend line here. You kind of have that ascending triangle type of look, the flat top up here and the rising lows. It's kind of a long-term pattern. You've dipped back recently, but still look like you're poised to work your way higher. Not a lot of stocks above their 50-period moving average. About 9 out of 10 are in a downtrend below that 50-period MA. Well, this is the 1 out of the 10, right? This is one of those outliers that's still holding up relatively well. And then I mentioned that the growth stocks were holding up better than most and doing okay today, like Snowflake was up 2.88% in a sideways market. Well, this is just right at the 50-period MA and is really in a trading range. You can see the equal lows and the equal highs. And think about, this is relatively strong compared to so many other things over the past few months. This is right at the trend line area. There's a lot of things to like about this stock right here, right now. Multiple levels of support converging right here in that 170 level. Now, if it breaks down hard, okay, all bets are off. But if we start to bounce, we should work our way back to 200 and quite possibly, maybe I'll say quite probably, even go up and through there over time. So Snowflake, relative strength, and again, just painting a picture of what seems most likely, that certainly looks like it's got a better possibility for upside. Meta, we've had on here for a couple of weeks now, and just talking about this setup and this pattern. On the bearish side, I'd be inclined to start to take profits into this. We've been highlighting this if you've been in the trade, but look to re-up on the rally. If you use Fibonacci retracements or whatever you want to use, we've now made a big move to the downside. Maybe you get a retracement up towards 150 or something where you could re-engage. But this would be one where within the next, maybe today or tomorrow, you'd be looking at maybe taking some money off the table. Microsoft. Here's one where I think you have more room immediately to get short. So where Meta we would have liked to have been short previously, Microsoft has a little bit fresher breakdown. I'd still love to see this rally we've been talking about. And if I could get short more on the retracement in Microsoft, I'd even like that. But it's a little bit cleaner breakdown recently. You've been in this symmetrical triangle and such. Again, most of these bears, I kind of feel like, boy, if we could get a rally, it'd be a nice short setup for many of them, but so many things are really, really stretched. Simon Property Group, again, I don't have a position. I'm certainly considering it. And I like the breakdown. I like that it had increasing volume, big expanded range candle. Would I love to see a little bit more bounce here, maybe fill this gap and then look to short it? Absolutely. You know, that's not a whole lot higher. It's from 89 where it's at right now, maybe to 92, $93 per share, but somewhere in there, I think you re-engage on the bearish side. Now, in the worst markets, in the deepest, most bearish markets, you just don't get much bounce. This market has the potential that all you're going to see is 1 and 2 day rallies and then it breaks hard again. It could be that bearish. Right now you're at that level of support on the S&P. I wouldn't be aggressively on the short side anymore. I think we see a little bit of a bounce. You can see how choppy it's been so far this week, trying to rally, kind of fading on. There's this tug of war happening. Maybe that's it. Maybe that's all the market has. The more it kind of stays here, if it stays in the same exact price range for a couple more days, then I'd have to agree. It just doesn't have it. If that's all the bounce it can muster, then this is a really bad market, and well, it's probably going to get worse. So be aware that we might have to jump into some of those bears more quickly if this market just doesn't have it. We're in a long-term bear market. I started putting this in when the market was in that big rally, and I wanted to remind people that we are not out of the woods, not by a long shot. And sure enough, we've come all the way off there back to the lows. The path of least resistance after this bounce is still lower because we are still more bear than bull in the markets. Core PCE on Friday. The market is begging and pleading for some sort of reprieve on inflation. If you were to see inflation go down sharply on some of these numbers, you could see the market up 5%, 3, 4, 5% in 1 or 2 days. I mean, that's not out of the question. There could be a big time relief rally, but it's probably somewhat inflation dependent because that's just where the Fed is focused. Carnival Cruise Lines, Nike, Micron, all reporting this week. So there's still some events there if you want to trade those stocks through earnings. Hope you enjoyed the market roundup today. Everyone have a great rest of your week, and we will see you next time. Goodbye, everyone.